Hello everyone, in this video we're going to be talking about rental property, income and expenses, the general items. We will be covering 3 items of income and 20 items of expenses. We'll try to go through these as quickly as possible and put in a few details in the areas that require it. So the first income item is really the rent that's been received from the tenant. The second one is other income, and that can be in relation to expenses incurred over here, but the tenant has agreed to reimburse you for it. Say for example, it might have been something that they have caused and agreed to pay you back for that item. So then you would record that income as income and the corresponding expense as an expense. The third is insurance proceeds. So if an insurance agency company pays you out for damage that your insurance cover rectifies, then that will go in as an income item, and the items that you need to replace, that will go in as an expense. Now, the item that you replace, we'll discuss this a little bit further down in the expenses section. We're now moving on to the expense items, and we'll put in a little bit of detail where it's required. Otherwise, we'll again go through these fairly quickly. So advertising, fairly straightforward, being number one. You're advertising for the tenant to live in the property, and that's immediately deductible in the year in which it's incurred. It's important to have a tenant in the property or be actively advertising publicly with a agent, a property manager, because if you don't do that, then generally speaking, a lot of these expenses will be disallowed because the property is not income producing. So that was advertising. Next, we're going to body corporate fees, and their fees associated with the agency that is looking after, say, the estate, or if you have a apartment building, then they look after the apartment building. And so body corporate fees are the fees that you pay to the agency or the entity that administers these things. That's body corporate fees. Number 3, borrowing costs. Now, with borrowing costs, they're things like loan establishment fees. If the amount is over $100, then you need to amortize that over 5 years. And amortization for the 5-year period starts from the date the fee is incurred. If the amount is $100 or less, it's immediately deductible in the year in which it's incurred. Next is cleaning costs. That's fairly straightforward. Council rates are also fairly straightforward. Then you have capital allowances, and that's the depreciation on items, on asset items. For example, an air conditioning unit, a washing machine, where it has a useful life, and then the expenditure associated with acquiring that item is spread out over the asset's useful life. Now, we've spoken previously about a depreciation report and how that works, so we'll link that to this video or in the comments. Next, we'll move on to gardening. Gardening has 2 parts to it. There's the hard part and then the soft part. The hard part is something like the garden shed. That's an asset, and that's depreciable over the useful life of that asset. However, soft costs like soil, grass, planting trees aren't deductible. These are included in the cost base of the asset and increase the total price of the asset. Next, move on to number 8, which is insurance. And insurance has landlord and property cover components, generally speaking. some policies will allow these to overlap. Landlord insurance can cover you for something like loss of rent. Now, when that income comes in, it needs to be reported as a revenue item. But obviously you're claiming the expense, and so there's a offsetting to some degree. In number 9, you have the interest which you're paying on the mortgage, and that's immediately deductible in the year in which it's incurred. Number 10 is land tax. That's fairly straightforward, so we won't spend any time on that. Legal fees, there's two aspects to legal fees. There's the cost of protecting money or ensuring the money comes in, and then there's legal fees associated with protecting the asset, being the building itself or acquiring that asset. So say for example, you incur legal fees in buying the house, the property, whether it's residential or commercial, that forms part of the cost base, the total price of the house. But if we're talking about something like legal fees for representing you in relation to removing a bad tenant, then that's associated more with the revenue side of things, and that's deductible in the year in which it's incurred. Number 12 is pest control, and I'm not talking about your neighbors here. Hopefully you're living next to good neighbors. I'm talking about obviously things like cockroaches, rats, termite protection, that type of thing. That's deductible in the year in which it's incurred. Number 13 is agent fees, and that's the property management fees. Some people suffer from agent feesitis, which means they complain that the property manager doesn't do a lot other than the fact that they collect the agent fees. I can assure you I've got some incredible property managers in my network, so if you're having issues with your property manager, please reach out to me and I'll look to connect you with ones that will look after you. Number 14 is repairs, and we have to distinguish between a repair, that is restoring something to the way it was previously operating. So for example, a air conditioning unit, you fix that air conditioning unit, then it's back to its normal operating conditions. It's operating fine. But say for example, you're going to completely replace that unit, then that's more of an asset, and then you have to depreciate that over its useful life. Obviously, if there is some depreciation left when you replace that asset, then you deduct what is left and start the depreciation again for the new asset. Number 15 is capital works, and that is the depreciation on the building component of the property. Not a lot of people know this, but capital works, the depreciation and the deduction is related to the cost attributed to the building. Now, we all know that builders add a margin to the cost of the building, the bricks, the mortar, the timber, so on and so forth. That margin is actually not deductible. So the depreciation report looks at the cost of the materials themselves and depreciates that component. You need a depreciation report to claim depreciation on assets and the building component of the property. Number 16 is office supplies. So if you help out in maintaining the property, then things like stamps, printing, stationery, that kind of thing, that's deductible for you. Travel used to be deductible some time ago. Now, we're just basing this on an individual return, but travel stopped being deductible because people were buying property in a state like Queensland when they lived in New South Wales or Victoria because they wanted to pretend like they are going interstate to check the property when really they were just holidaying. And so they would claim the expenses associated with the holiday as an expense here. So they said, enough of that. We are no longer allowing travel expenses to be claimed. It's different when you have a business of renting properties, but we can discuss that in another video. The next one is water. Fairly straightforward. Generally speaking, the tenant is the one that pays for water. The only reason you really should be paying for water is when the tenant is not there and you're paying for the privilege of having that water being connected to your property. Number 19 is electricity, and generally, again, the tenant pays for that unless for whatever reason the property is not tenanted and you need to pay for it yourself. The last one is sundry items, and if you are an individual renting out your property, a sundry expense might be something like GST that's stated on the end of financial year statement provided by your managing agent. So I hope these income and expense items were clear. We're going to link either in the comments or in this video the videos to depreciation, where we discuss that and how it affects tax and you being able to buy another property sooner. Thank you for watching this video. As always, we hope it's been very useful to you. If you found it helpful and you know someone in your network who can benefit from it, please feel free to share this video with them. Also, please subscribe, like this video, and hit the bell symbol so you're notified of the videos that we will be releasing next as soon as they are out, so you don't miss anything. If you have any comments, whether that relates to a topic you think we should cover next or something we could be doing better, please do share it with us. We love to hear your feedback. Till the next video, wishing you all the best.